Well, I got to tell you, it was tough sledding for the market, and there was a whole lot of reasons, not really one specific thing. Listen, the implosion of commodities, particularly oil, we know that means deflation. We thought it was going to be a great thing, but when it goes from 100 to 39, that's a problem. Then, of course, there's this notion of the Fed rate hike. It's probably going to happen next week. I don't think there's any way Janet Yellen can change her mind. The problem, though, is it may have nothing to do with the economy and everything to do with politics. And if Wall Street believes that's true, then it's going to be damaging. Then, of course, you think about today, you had retail sales, consumer sentiment numbers. They were just so-so. You know, this whole thing, we can only celebrate mediocrity so far. And another thing that's worrisome for me, savings rates right now at a multi-year high, no matter what source you use. So why is there so much angst among consumers? Right here as we sit just a couple of weeks from Christmas. But I want you to think about this, and I want you to take a look at this. This is history, okay? When the Fed begins lift off, when they start to raise rates for the first time in a cycle, going back to the 1950s, the stock market has gone up. In fact, 1 year after, the market is usually up single digits, sometimes even more. But 2 years out, look at those numbers, absolutely huge. So the big question now is what's bugging the market? Should you get out, or should you be ready to buy in weakness? We're going to discuss it. Back with me, Hilary Kramer. Okay, Hilary. Now, you are known as the woman with the rose-colored glasses on. I know that we're all foggy this week. How are you feeling? Are you confident still about this market?
I'm still confident in the market. I know it seems hard to imagine when we have a week like this that's the worst since
But I mean, you and I know that markets go up and down.
That's right.
Is there something more, though? Is there something unique about this weakness for this week?
The price of oil dropping, as you said, that for the first time is sinking into a lot of big institutional investors that, as you've been pointing out, Charles, for over a year now, that also can mean deflationary pressure and not just great news at the pump. But I still say we could see a Santa Claus rally. Yes, retail sales weren't great, but they were still positive. People are still going to restaurants. There's still a season of Christmas shopping that we're going to experience. And China is an external problem to us. Even though they could put pressure on us with the yuan, with their own currency, we should be very positive. And there's areas that you can buy in this market.
So you say Santa Claus rally, but that's just 2 weeks away. Let's talk a little bit further out right now. We've had a heck of a run since those March of 2009 lows. This year, we'll probably be lucky if we're flat, maybe slightly higher. No big deal. At some point, you consolidate gains. But investors are thinking to themselves, or they have to be, is the party over?
No, I think that 2016 could end up being a very strong year. We may see some volatility in the first quarter, certainly with all these commodities, the junk bond market, the high yield market, as we've heard a lot about today, really spooked Wall Street. But you still have some really strong values there in retail, even in the pharmaceuticals.
See, here's the thing. Value hasn't really worked, and to a large degree. I mean, let's be honest. This market, you've got about 10 stocks, the Facebooks, the Amazons, the Netflix of the world, and they have been so powerful that they have masked amazing carnage. I didn't get a chance to look at the breadth today, new highs versus new lows, but I guarantee you for every stock that probably closed at a new high, maybe 50 closed at a new low. That is a scary, scary thing to think that many stocks are getting crushed.
And that's why so many investors are so upset, because they're not just down 2.6% on the year, they're down much more. But you can go into certain companies, they will do well. Don't forget, McDonald's, General Electric, Procter & Gamble, they all did just fine this week. So there are pockets of strength.
That's called the blue chip safe havens.
That's right.
All right, I think we'll probably be looking to buy too. Next